Alright guys, welcome back to my channel. If you've been following me on socials for the last couple of days, you noticed that I've just passed phase 1 and 2 on both FTMO and Think Capital. So I thought I'd do a quick review video, explain the process. I'll even go through the tilt that I endured on phase 1 for both accounts, how I managed to pull myself out of it, and if you stay tuned right till the end of this video, I'll also show you a very neat little trick that will get you 20% off your next FTMO funded challenge. Right, so let's start off with phase 1 on FTMO and Think Capital. Okay, the start of my FTMO challenge actually it didn't go too bad, right? We started off with a couple of trades, and by trade number 8, we were in profit, or I was in profit by 2004, which is about 2.4%. What happened then is that I took a couple of losses, and those losses obviously sent me back down. And what happened was it actually got a little bit worse and worse as my profit came back down towards the initial balance. I think it kind of triggered a tilt, which I'll go through in a second. But then slowly but surely, a series of very small losses on the account took me down into around about 3,000 in drawdown. So I was minus 3% all of a sudden. I had to shake myself, take a couple of days off, refresh, and just refocus. And what I was doing was I was trying to scalp my way into trades that I normally wouldn't. And with the way gold's been moving lately, it was potential for a blown account. And I've been here before, so what I had to do was steady the ship. Okay, steady the ship, get back to what I know I can do best, and just start to pull this account back out of drawdown. Now, we had a couple of moves back to the upside, getting back to a 1.4% in profit, and then we had another little drop down, and then a series of losses again. Those losses took me to minus 2%, but what happened from there was, again, I had to look at what I was doing, refocus. I actually increased the size of my stop loss, and I also moved away from gold for a couple of days, because at this point in the phase 1, gold was not moving the way I like it to move. It was basically, it would move in my favor, come down, slam, take me out, and then it would go back in my favor again. It was very volatile. I think what had happened is we'd gone from a cycle phase into an accumulation phase, into a distribution phase, and I just got caught up in it. Because obviously I'm long bias on gold overall, it wasn't helping me. So I moved over and I started trading NASDAQ, and I also traded DAX, and started to, well, you can see what happened. In a couple of days, I went from minus 2 to plus 0.8 to plus 3.8, and then that last winning trade was actually a 6% ripper on NASDAQ. So overall, I didn't have a bad consistency rating. 72% isn't the worst in the world. It's not the best in the world either, but it's ever so slightly up towards the better half of the scale. So quite happy with that. Nothing wrong there. 10 days it took me to pass. Okay, for the initial start date. I actually went on tilt, as I've already said, and I went to minus 4.5% on one day, and I managed to stop myself trading, obviously, which is a very important thing to be able to do. Just walk away from the charts, refresh your mind, and go again. Max loss on the account was actually recorded at 3.5 or 3.6, almost thereabout. Okay, and the profit target was hit in 10 days. Average profit about 1.1, which again is 1.1%. Average loss, you can see here, is around about 300-400 quid in dollars. That is part of me going on tilt, recording these smaller losses. But again, you can see my average profit is almost 3 times what I was losing, or thereabouts. Win rate is terrible. Okay, it just goes to show you can actually make a lot of profit with a low win rate if you've got a decent RR, which was hovering around a 1 to 3. Okay, I don't pay any attention to this expectancy, but the profit factor was 1.8, which is not too bad. Could be a lot better. Again, it's this tilt day here that's affecting the score on the left hand side. So my tilt day was minus 4.5%. Okay, the following day I took a lot less trades, but I managed to pull back the majority of that tilt, and then from there on it was onwards and upwards. So there's a lot of trades taken in here. Some of them to me, like a 0.5% is a half a loss, so it's me cutting my trades quickly before they actually turn into a full loss. We're just going to go and scroll over to page 2, I think it is. You can see the tilt here, right? So this is me going on tilt. This is basically losing a bit of focus, maybe getting a little bit annoyed, emotions kick in. It's absolutely normal when this happens. Okay, what you've got to be able to do is then pull yourself out of that tilt, walk away, and basically not come back until you're refocused. So yeah, there's an awful lot of trades in here. I did do a little bit of scalping just to try and pull myself back out of drawdown a couple of times. It worked for the most part, but then again, when it doesn't work and you end up on tilt, it can have a real negative impact, which is what you can see right here. This is not a good day for me. This is, you know, for me, this should not happen. It happens. That being said, it's something that everybody's got to try and work on. Basically, you've got to try and stop these tilt days, because if over the long term, you know, you end up tilting once a week, you could blow the count in maybe 2 or 3 weeks, or even quicker. So opening times, okay, again, it's not really something I pay a massive amount of interest to, but you can see here clearly, I think this is the majority of maybe 2 or 3 trades inside that 11 a.m. More profitable in London session, and then of course I was trading NASDAQ, which was that big ripper that passed the 10k target, and majority of my trades were evidently on gold. Now, if we look at Think Capital phase 1, okay, I had a couple of days. I actually started this on the 28th. FTMO was started on the 22nd of January. Okay, so this was started a couple of days later, and coincidentally, it started okay. Again, at a decent start, 1.2, 1.6 in profit. Okay, although that was closed out at 1.2 thereabouts. I actually went on tilt on the 2 accounts at the same time. So not the best start to my Think Capital challenge. Straight back out of drawdown again, which you can see here, same process I was following on FTMO. I wasn't using a trade copier, although I have done in the past. It's not something that I like to use. Think Capital, I don't have the trade copier settings enabled, so I'm not actually allowed to copy from Think Capital to FTMO or FTMO to Think Capital, and I trade FTMO on CTrader. I much prefer CTrader to MT5, so I decided just to trade CTrader on my desktop and to trade Think Capital on my phone. So we got a decent win rate here. Okay, again, there was a couple of days missing. I didn't start this until a couple of days after I started my FTMO challenge. Average win was around 837, which is almost 1%. My average loss was around about 0.5%, which isn't too bad. Majority of my trades are on gold. I'm a gold trader for the most part. I've only recently started trading indices, but you can see I've also traded NASDAQ a couple of times, and again that was the trade which sent me to my profit target. So you can see right here, these are the last 3 trades I took. All right, so I had a small, maybe a couple of losses, maybe a small tilt, not the best. There's a couple of losses here, me trying to scalp my way in, probably trying to just push myself further away from the initial balance. So not the best trading, but you can see where I start to pick myself up. I take a 3R, I take a 3R, and I take a 4.3R trade to finish off phase 1. Right, so that's phase one done and dusted. Took me a total of 10 days to pass for the FTMO and Think Capital. Let's move on to phase two. All right, so phase two was smooth, a lot better, a lot better. Again, when you get to phase two, it's almost like a different kind of process happens in your mind. Phase ones can be pretty tricky. A lot of people maybe tend to do a lot of phase ones. Some people get aggressive on them, fail them, just start again. Some people go deep in the drawdown and say, do you know what, sod it, I'm just going to go max leverage and I'm just going to take what it gives me. When you get to phase two, you need to have a lot more focus and you need to be a lot more patient. You need to have the right mindset moving on into phase two, because you don't want to get to phase two and then blow up and then go all the way back to phase one. That's a real head fuck. It's not something that you want to do. All right, so the way I start my challenges excuse me, the way I start my challenges, I generally just protect my initial balance for as long as I can, right? If that means I'm taking a break even, and a break even, that's just slowly pushing my account away from the initial balance, because once you get to about 1%, 1.5%, maybe 2% in profit, you can start adding a little bit more risk to start pushing the account further away from that initial balance. Now, the initial balance obviously is 100k, but the target is a lot lower. So on FTMO, you've only got to hit 5%. Now, you can actually do that in one trade. However, you've still got 4 days with FTMO that you've got to trade this account for. So there's no point in rushing it. You just take your time, get that account. If it means you hit a break even, add maybe 5 pips or 10 pips on gold. Just add that to a buffer. So when you trade does come back down to break even, it's not a red number. Sometimes it can hit break even and take off, maybe $50 to $100 off you. You want it to do the opposite of that, because on your mindset, it plays a big part. And seeing those red numbers, it's not very nice, and that can also initiate a tilt. So here are my break evens first couple of days, and then I hit a nice trade, which I'm going to go through review in a second on the chart. That was a gold trade, CPI day. I actually waited for all the data to be released, and then what I actually did was I sat back. I waited patiently for my trade setup to be there, and I think a lot of people on Twitter actually were taking the same trade. It was such a nice clean trade, it was impossible to sit out of. This trade was actually very close to hitting the full profit target in one hit, but I like to trail my stop loss as price is moving into profit. So the first thing I do is when we get to 2R, I trail to 1R. Once we get to 3R, I start trailing to 2R. And then once we start blowing past 3R, again, I'm trailing my stop loss to 3R in profit. That's because I don't take partials. I like to be either in or out the trade. I don't want to be sitting around looking at, what potentially is, more profits, or when do I close, or is it going to come back? Should I just close it all out in the first place? I don't leave runners. I just like to be in or out the trade, and then I can go about my day. So it took a very small loss. I took a 1% loss on gold. I got into early, but I recaptured that loss pretty much within the same session. What I'd done is I realized that I'd read the wrong time frame. I'd actually got into the trade. It didn't even go into profit. It came down and it took me straight out. So I recovered that loss pretty much straight away. And then I took a nice trade on the DAX, which was a 2R trade, and that took me to the profit target. This consistency score, again, if I'd been trading, a lot longer, this account was only traded for 4 days. So the consistency score doesn't have time to build up. Maybe if I'd continued trading this for the next 2-3 weeks, the consistency score would be a lot higher. But of course, I only traded 4 days. So max daily loss was 2,000. Okay, so that's more than likely the drawdown. We've then got max loss of 647, and the profit target was hit again. So average profit, average loss. This is again made up of 7 trades. Okay, my win rate is 85.71% with a profit factor of 5.29. Now, all in all, I only took one loss on this account. So if we look down here, these are all the trades I took. Okay, so we've got $70, $31.50, $196. Then we got the 3-hour gold trade. Okay, then we took a loss. Then we took a recovery trade, which basically it just recovered the loss that I'd taken on a day on gold. And then we took the 2-hour trade that just took me over the profit target. So this again, average loss. There's only one loss. I didn't have a single non-profitable day, a red day, and I traded obviously gold, my favorite currency in the world, DAX, and the break-even trades. These are the ones on NASDAQ. For some reason it just wouldn't run, and by the time I'd sort of entered the trade a couple of times, I just lost interest, and I actually went shopping for the day because I couldn't look at the charts anymore. So that's the FTMO account. Now you're going to see pretty much the same thing on Think Capital. Think Capital, again, 5% profit target. The trades I took here are exactly the same as what I'd taken on the FTMO account. So I can review this very quickly. 85.71% win rate, 5.61 profit factor, average win, average loss is exactly the same. You can see the trades here. The numbers don't quite add up, and that's because there's a different price print between FTMO and Think Capital brokerage. So the FTMO actually has, at one point, the candles were printing completely different, which is why, another reason why I kind of lost interest in trading NASDAQ, because I was looking at the 30-minute candles on FTMO. They were looking very much different to what they were looking on Think Capital. I think that's because FTMO is NASDAQ 100 cash, and on Think Capital it's NASDAQ 100. So not 100% sure the difference, but for me the both trades were moving in the same direction. I was taking the same trades. It was just that one was pulling back a lot harder than the other. And another reason why I got out, we just started off trading this account. I didn't want to take a loss on it. So I'm more than happy just to accumulate these small wins, just to give myself a little bit of a buffer. Even if it's like a 0.3, 0.4% buffer. If I take a 1% loss, it's only going maybe 0.7, 0.6 into drawdown. So it's more than recoverable with just one trade. Okay, so we took the 3-hour trade, and then we took the 1-hour loss. We did the same thing, same process, and then just about 2-hour gain. And again, it's because these numbers aren't quite adding up 100% with FTMO. So that's my phase 2. Okay, again, very good process, went very smooth. This was passed in 4 days, the same amount of time as it took me to pass the FTMO challenge. Very happy with this, and now I have an extra 200k in the bag ready to trade next week. Right, so in the next part of the video I'm going to go through the trades. I'll go through the trades that I took on the phase 2 challenges. I don't have obviously all the trades that I took on phase 1, there's too many of them, but I'll go through the last couple of trades. I'll go through the entry process, and I'll explain to you what I see, why I enter, and again I'll just give a little bit of information on why I've increased my stop loss on gold, and gone back to trading the 15, 30 and 1-hour time frames instead of trying to use the 5-minute bitch candle, which is becoming quite famous. All right, so the first trade that I took, which was a nice win after the multiple break-evens that I took on NASDAQ, was CPI day. Okay, so I had a one-to-one session with Jerome, which is one of my very promising students. We'd pinpointed these levels here because I use daily levels and accompany those with fair value gaps. There's no way I was taking a risk and taking a trade from here trying to use a limit order. My preference is to wait and let the trade start to play out, and then see if we can capture the second part of the move, because ultimately gold will move from daily to daily. If that happens in a day, that's because there's usually a lot of news involved, but sometimes that will take a couple of days. Nonetheless, gold will move from daily to daily, wait, then it will break out above the daily, then it will use a daily as a support level, then it moves to the next daily. If it hasn't got a daily above it, because obviously we're running into all-time highs, it will create a new daily after it's broken the all-time highs. So after it breaks all-time highs, we'll wait for a daily level to form, which is a bearish daily candle, and then we look to trade from one daily to the next. Anyway, this trade here, I basically waited for price to do what it did in CPI. So it came down. In the next 30 minutes, we moved all the way back up. Okay, took the initial opening price prior to, which is here, this candle, moved down, liquidity grab, moved all the way up, created this fair value gap, which was 2 p.m. And I teach my students the first fair value gap of each session is the most important fair value gap for you to trade during that session. So we had this fair value gap here. And again, this is not something that I won't just use a stop order. I won't just buy here. I will be looking for a formation that I teach, and I will be basically looking for a very specific formation of candles. Now, the first thing that you can see is the wicks are starting to move up on the 15-minute time frame. 30-minute time frame, it's more of a actual pin bar, okay, but because of the volume that was involved with CPI day, get a chance to enter a little bit, maybe more so on the lower time frame because you've got the volume to back it up, right? So what we've basically got is we've come down here, and this candle, the first thing I noticed was it's actually stopped closed with no bottom wick. Now that to me normally states that we're running out of room to move into. Conveniently, it stopped at the fair value gap. So we had this bullish facing 5-minute candle, okay, 5 minutes past 3. Then we've got what is just about a liquidity grab on that candle. And if you zoom in, you're basically looking at the reversal patterns on these wicks, okay? So the low, and then the lower low, and then the higher low. Now, once this formation happens, you can see that the market's running out of volume to push down. There's a very high chance that the next candle is going to move bullish, okay? And sometimes it can do that very quick. So I place a stop order above this wick. I place my stop loss just below here and below the fair value gap. Once the volume kicked in on this candle at 20 past, where's that gone? 20 past 3. Don't know what happened there, guys. Sorry. 20 past 3. My trade was triggered and I went straight into profit. I had zero drawdown with a period here through till about 4:30 where it just didn't know what to do basically. For me, it was accumulating more orders to push price back up to this daily because, as I said, we trade from one daily to the other. If it's rejected one daily, the next destination for me is always going to be the next daily in a bullish motion. So this trade didn't actually hit my full 5R. Okay, it pulled back and it tagged me out. I was trading 3R, which is down here somewhere. Yeah, round about here, 2901. Okay, that's what happened. I was hoping it would just reject here somewhere and move up and take that 5% in one hit. That's not what happened. So I took 3R, took 3%, and that was it for me. Moved on. Now I did take a couple of losses, which I've already stated here. I took this move as the reversal, okay, because we're coming off these imbalances here to the left. What I didn't realize that it wasn't quite ready, obviously. And what I've started to notice on gold the last couple of days is that it will take a sweep and then show you that it wants to move up. Then it will come back down and then it will come back down. Now, part of my trading plan is that I have to wait for a 5-minute bitch candle, 15-minute bitch candle, or a 30-minute bitch candle. This wasn't actually a bitch candle because it didn't quite take the low of the previous candle. We had then 2 bitch candles thereafter. So we had this one and we had this one. These are bitch candles because they basically swipe the previous low and closed bullish, and this is exactly what the same. This is the same what this one done, right? So we've actually got bitch candle followed by another bitch candle at 9 o'clock. This one is at 8:40. So prior to the 8:15, this is the one that I waited for, because when you're getting that close to the end of the hour, 1 hour candle, it's normally better just to wait an extra 5-10 minutes. If the trade goes without you, it goes without you. You can either get in on the second phase of the move or not. But it was just very, very choppy. It basically moved up. I got to about 1.5 R. I trailed my stop loss just below here. And I took the 1 R to cover the loss, because I took a loss here. So I wanted to recover that loss. That's the first thing in my mind when I take a loss. I want to recover that loss with the next trade. If that trade runs a 2R, great. If it runs a 3R, even better. If I trail at 1R, I know that I've covered the previous loss, whether that's the previous day or whether it's the previous candle. It doesn't matter. I want to cover that loss as quick as I can. The next trade I took was a thing of beauty, and now you can see exactly the same thing here, more or less. All right, because if I put on Asian session, we've got Asian session, we've got this big blow off and then a big drop. This was the liquidity grab. Now, if I wasn't in gold, this was the trade from here I would have taken, because this was actually part of my trading plan, but I'd already entered gold. So it was kind of, if I wasn't in gold, I would have been in this trade, and this would have probably just gone straight to take profit. I would have hit that phase 2 with 100% win rate, which I didn't do, unfortunately. I've done that before with a different prop firm. Nice feeling to have, but ultimately it doesn't matter as long as you pass the account. That's the most important thing. So we had the same process here. You can see this candle closes with no bottom wick. It's actually closed outside of this 15-minute fair value gap, but when we look to the left, we've got this 1 hour structure, 15-minute structure, sorry. So we've got a 15-minute structure here. So we've got the high, we've actually got the low, the liquidity grab, and then we've got the higher high. So we're waiting for a new higher low to form. Okay, so we've got confluences here. We've got the Asian session, we've got Frankfurt session, we've got the liquidity grab here in London. We've broken structure, we come back down. We've got to look for our next point of entry, which is the second phase of the move generally. So we've got a 15-minute imbalance. Okay, fantastic. We've also got this 15-minute structure here. We've actually just come tap down to it. We've got the doji, we've got the candle closed with no bottom wick, and then we've got what is almost a 5-minute bitch candle, and then basically we take the order as the trade is, as the candle's flipping. So on the 15-minute it looks like that. On the 30-minute we've got this kind of setup, and then on the 1 hour we've actually got what turns out to be a pin bar retest, and within an hour I've passed phase 2. So that's it. Basically, I'll now show you how to get 20% off FTMO. All right, so quite simply, I don't think a lot of people actually know this, right? But if you do the FTMO Academy and you pass the challenge, okay, they actually give you rewards along the way. They get some merchandise and some nice frilly little bits and bobs. But if you get all the way to the end of it, it can be quite time consuming, because you've actually got a lot of categories to get through. So the gateway to trading, financial markets, Forex, technical analysis, statistical analysis, fundamental analysis, sentiment analysis, putting it all together. This is actually incomplete. I actually stopped doing it because you've got to complete a certain amount of it before you can take the final test. All right. Once you've then completed the FTMO Academy, you can see my progress here, right? I did part 1, part 2. I actually didn't even get into part 3 and part 4, but I got enough of the progress in order to get to the final exam, and then you get the special gift. So when you get the special gift, they actually give you this nice certificate. Now, the only thing is you've got to hit over 90%. All right, you've got to get it done, and you've got to pass with over 90%. They allow you to take it once every 8 hours. Okay, so you can only basically take it once a day. That's the method I used. I did fail it a couple of times because getting 92% is quite hard. But there are a couple of websites that will actually give you all of the answers. It's just that you're on a time scale to do it as well. So if you've got time, go back to the FTMO Academy and just start chipping away at it over the next couple of hours, because the special gift that you receive is a 20% off. It's not a 20% off voucher. You don't have a code. It's automatically added to your client area. So yeah, if you can get 20% off FTMO, you know FTMO don't do big discounts on any of their accounts, but you get 20% off. It's definitely worth it. And then just make sure you pass that challenge. Yeah, good luck.